Welcome back to Closing Bell on Thursday. Market looks really good, but I just want to show my market outlook, the data that I'm seeing, and the confidence is there with the whole economic recovery, not just the stack recovery, not just the cyclical recovery, but the economic recovery as it holds going to 2021 as we all were expecting since January the 1st. So first, let's start oil. Oil going to 66, demand is increasing, people are selling more oil, but OPEC has decided not to ramp production, let's stay that way, let everybody recover. So the forecast now, it looks like oil might go as high as 70 or 75. Let's stay there and let's keep it up there so the demand surge and all the borders opening up for air flights to fly in and out again, which is good news for the oil industry. And also what I like is the Dow Jones close to that 32,500 points, up 0.6%. That's good. Nasdaq up a staggering 2.5% at 13,400. Only 600 points, I would say, about 2 days, 600 points to hit the all-time high, testing the ceiling of 14,000 again. Okay, but what I really like is the VIX dropping to 21.91. Hopefully they drop to 19.99. To be able to drop to 19.99, if we stay this way, where the Nasdaq is high, going up, recovering, the Dow Jones is up, the DAX German index is up, the Japanese index is up, the Shanghai index is up, the FTSE 100, the French index is up. So all these major economic indexes are moving up slowly. It's good because it shows that sideline money is coming back in. What I didn't like last week is when you see the tax moving to rotating to cyclicals and cyclicals moving back again to tax, where you see just people are just trying to swing trade for a point there, but when things are coming back, confidence at $2 trillion, some claim $3 trillion, sideline monies are slowly coming back in, trying to help the business run. People are confident putting their money back in. Money under the bed is starting to disengage itself. Money is rotating back in, and it dampens down the volatility. So my forecast at the beginning of the year saying that I really want to see the VIX drop to 19.99 and hopefully average out about 16 throughout the whole year. Okay, we've lost 3 months, but hopefully if it comes down, that's where volatility is low, where you do not see the huge 10%, 20%, 30% jump, but a slow gradual increase where everything's investment equity form starts to stabilize, starts eyeing out all the kinks. So 3 key reasons why that's happening today. It's giving everybody confidence to put money back into equity stocks. First is the Treasury auction. 120 billion government debt is being auctioned out, that the Federal Reserve will be buying back in, and that will help reduce the volatility on the 10-year Treasury yield that spiked up to 1.5, 1.6, where everybody was panicking by data that it could push inflation rate up. It's true, it panics people, inflation rate goes up, interest rate goes up. That's simple as that we do not want to happen. We want to see 2021 stretch out nicely with no interest rate hikes. So hopefully that happens, let it stay that way. 1.9 trillion stimulus check has been issued by Joe Biden. President Joe Biden has kindly signed off that stimulus bill, and now every adult will be receiving 1,400 per adult household, making everybody happy, providing you within the threshold, of course. Kids will be receiving. So it gives people confidence, gives people time to have that certainty of roof and food on the table. And also people can start getting into employment again. Small companies, big industry will start employing people in America again. Finally, the ECB, European Commission Bank. Remember, Europe is twice the size of America in terms of population, so they do make a movement as well. So today, Christine Lagarde has kindly said that ramp bond buying will still be ongoing. It's not going to stop. Okay, they're going to also try to tackle that surging yield. The last thing you need the surging yield to go up again. The same whole thing, inflation, interest rates will go up. Let's settle down with 1.85 trillion euros being bought on bonds, so that it allows small companies, travel companies, the likes of industrial to gain employment and bring people back into the workforce, gives people confidence, let things economy start rolling. And so with the vaccine progressing really, really well in Europe, we hope to see more recovery, not just in the UK, not just in France, but the entire Europe was as on its own. So it's really good news. It gives confidence to investors. It gives confidence that we can see where we can put the money and allow it to grow with the recovery themselves. It's risky, but people are willing to put money just now. So hopefully this will go on for the next few weeks and hopefully dampens down. Personally, I like this all-time high in 20% surge. It's great, but eventually we need to start settling down to that 0.5, 0.7, 0.3, and then minus 0.3. You know, those days, the good old days where stock market just move marginally, and that's where I call stability. That's where the VIX is under 16. That is where we want to go into. We want to start stopping that huge spikes up and huge spikes down that causes so much upset and the bubble territory. Overvaluation, that's what I really want to stop. So as an investor that has been invested for 10 years, that is where stability runs. That's where you see the repeat of 2016, 2017 with a great bull run. We want another great bull run, and hopefully this dampens and settles things with great recovery. So this is me for the market outlook today. I'm pretty confident if we keep staying this way, things will look really good, and we can just put our money on a single stock and forget about it and get on with our lives and do something else, save money and buy on dollar cost averaging on a monthly basis. That's what we really want to get back as investors, especially for you new investors. Finally things settle on, and then you can just focus on other things like your job opening up, travels and everything. So this is my view on the market outlook. So if you want to stick with me for extra bell, where I'm going to speak about 7 stocks which I feel which is still good value despite the fact that tech stocks been rocketing. So within this 7 stock, 5 are tech and 2 are British stocks. Yes, I've gone back to British stocks. So stick with me on the next extra time. You hear more information from me. So if you're not, I'll see you tomorrow. Take care. Bye.
I hope you enjoyed that video.
Please like this video.
And subscribe to the channel.
Please press the bell button. Ding dong.
Finally, watch the recent video up here. Bye bye.
Bye bye.